Welcome to Friedland's Corner. This is Jeffrey Friedland. Rising interest rates, a lack of liquidity through the public markets, and the additional stress on the U.S. financial system due to the collapses of some regional banks have increased the challenges of the deal-making environment for startup and early-stage companies during the first 5 months of this year. Pre-money valuations and deal sizes have continued their descent, further widening the gap from the record high deal sizes and valuations of the past couple of years. Wavering confidence in a venture strategy has sidelined capital and led to the pullback of most non-traditional investors, impairing later stage activity. For startups and early stage companies, this has made securing needed capital even more difficult, with the capital demand to supply ratio spiking to new highs. Despite the dreary deal-making environment, many investors have found opportunistic footholds as the bargaining power swings further to the favor of investors. More structured equity deals that include provisions for downside protection, dividends, and participating shares are increasingly key components of negotiations, decreasing to some extent the risk for investors and helping to preserve valuations of startup and early stage companies. Much speculation remains as to when valuations will bottom out and paths to liquidity will reopen. Most startups and early stage companies are biding their time, taking on debt and or cutting costs, but others, particularly in the life sciences sector, need public markets to access large amounts of capital for clinical trials and research and development. Interestingly, half of the public exits during the first quarter of this year were in the life sciences and healthcare space. How long other startups and early stage companies can maintain operations and hang in there without an opportunity for new funding remains an unknown. The bottom line, company management needs to maintain flexibility regarding valuations and transaction sizes. Deals are getting done, but it is a challenge. Until next time, this is Jeffrey Friedland. Goodbye.